Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Sunday, February the 13th. The year's 2022. Let's talk trading. Weekly, open, and gap. These videos are for educational purposes only. Your results may differ from mine. And we're about halfway through the trading month, so let's just remember to always have our risk management in place. Never lose more than you're willing to lose on any one particular trade. So make sure you have your stops in place and your position size is sized correctly. So looking at the month, we're 93 pips above the open, 107 off the high, and 102 off the low. So we're kind of smack dab in the middle of the monthly range right now. For the week, we're 10 pips below the open. We are sitting 35 pips below the high and 1 above the low. And as you can see here on the dashboard, we have 1, 2, 3 pairs that haven't filled the weekly open gap. We're putting in the weekly opening range. We're only 3 pips above the high of the opening range for the year and 10 pips about high the opening range for the month. So we're heading right back down in this opening range. And on this particular broker, 35.26 is the yearly open. So we might want to look to play that yearly open for some movement away from the yearly open. So if you cross below it, you want to go south. If you cross above it, you want to go north. And 10 pips above that yearly open, as I mentioned before. Looking at the inside bar, we have broken out of that inside bar that happened 4 weeks ago, the weekly inside bar at 35.45. You can see we're 8.7, 8.9 pips below it at the moment. And once again, we have a lot of weekly inside bar action here. That's definitely a lot of weekly inside bar. And we still have some monthly inside bar action. So pick your pairs and trade accordingly. Even though we are about 5 hours into the trading day, almost 6, we've got one pair over 100 pips. That's the pound New Zealand and what I like to call the new beast, with the pound dollar clocking in at 36 pips. Okay, the weekly open. You can see we just pretty much have gone straight up from the weekly open. Now we've come back down and crossed below it. So once again, that weekly open crossover proving to be a profitable trade even this time of the day. Once again, we've got to put in those wicks one way or the other. Rat zone range is too low, so we'll have to check the rat later tomorrow. Well, today, depending on where you are in the world. We've taken out the, looks like we've taken out the daily pivot, and it looks like we've taken out the weekly pivot. So price near the pivot, bias is short. It seems like it worked when it was coming down. So took out the daily pivot. We've taken out the weekly, and we've already taken out the monthly. In fact, we're right back near that monthly pivot at 35.17. Wick zone. Friday's candle was definitely mostly wick, so we're going to probably spend a good part of the day in the wick zone. So this should be a very interesting day. Looking at the ranges here, so far no range for this week, but we pretty much analyzed last week when I did the weekly wrap up. Notice we had a range under 200 pips, so chances are this week it might continue that compression. We'll just have to wait and see. as far as the price action chart here with the Walmart lines highlighted. Um, and let's see, let's put this back to the hour time frame. You can see right here, there was a nice move, almost 20 pips to the upside, and then price has reversed and come off of that 70. And from here, this little setup, a big bar followed by another big bar. This area right here, some people like to call that a kink. In fact, I've got some indicators that'll be highlighting this type of trade coming out soon. And you can see here, price failed to close above the open of this candle. So there was an indication here. Let's take a short. And higher low, lower high with the three balls on M1. You can see it looks like we're putting in a lower high. With this compressed range, I'm not looking for reversals at this time of day. Wait for the London boys to possibly come in and start trading. Trying to remember if there was any questions. Oh yeah, there was somebody over on Crestlick that wanted to know how I posted the video, so I showed them how I did it, and I guess it's kind of hard figuring it out. There's a lot of these forums. You go to one forum, you have to use one way to post a video. You go to a different forum, you have to use a different way. So I pretty much only post my videos. Let's see, well, YouTube, of course, then on the Facebook group and Crestlick, and then on the Reddit. Oh, I think I post them on my blog and Pinterest. But as far as the other trading forums, it's just just too much of a hassle. Too many people, always wanting to take a shot, and I'm too old for that nonsense. I just don't feel like playing their games anymore. I think the people know where to find me by this time. Um, Once again, just looking at the indicator two, I was having some success with it on Friday. I was actually having a whole lot of fun. See if it continues this week. Mainly seeing when this number gets above 5, it likes to revert. But you can see here we've got some pretty small candles, not much of range. So that type of trade wouldn't work in this type of market. So sometimes you have to match your tactics, or actually all the times you have to match your tactics to what you see, the present market conditions. So usually during this Asian session, you see these slow, methodical moves here, and obviously they're just moving the price down. And we'll just have to wait and see if we go coast to coast from the bottom back up to the top and then some. It was definitely fun on Friday, that was for sure. And the above below indicator pretty much is just saying right now we've got no closes below. Here on Friday we had 47 closes below this level, and for this week, 0, because it's still first day of the week. And for this month, you can see 1,058 closes below this level, 1,554 above this level. So obviously there was more closes above than below. So what does that tell you? It seems like there might be more strength to the upside, but we'll just have to wait and see. I was watching some other traders' videos over the weekend, mainly looking at how they do their risk and money management. Um, that's something that I was working on, because with many of these methods, people always ask, where do I put the stop? Where do I put the stop? How much, and it's usually, well, you have to decide how much you want to risk on a trade. And then depending on where you want to put the stop, then you have to, change your position size. So you're never going to risk more on a trade than you're willing to risk. And it's one of those things that's pretty simple equation. In fact, I wrote another indicator for it, and I'll probably post it sometime soon. But it's basically based on the you look at the ATR, and you don't want to give up more than 1.5 ATRs. And so let me see if I have one of these on the chart here. Well, actually, you can look at the average, because the average and the ATR are pretty much the same. In fact, I did make a slight modification to the smart ranges indicator, and you can see here it'll also show the ATR, and if you want to, you can have the ATR over here also. So I have to get that out to the 2020 donators, but so you can show the ATR along with the average, or if you don't want to see the average, you can turn it off. So right there we've got the ATR. So last week was below the ATR 12. And it just gives you a another view of what price is doing. You have to pay attention to what price is doing, how it's behaving, how it's reacting around certain levels. And one of my old time favorite levels was the previous mid, which sometimes is really close to the pivot point and sometimes it's not. But it just seems like price likes to move away from that previous middle, and so you can almost trade it the same way you do an open crossover. In fact, you do trade it the same way. So if price crosses above it, you go long. If it crosses below it, you go short. So you can see here, it crossed above just by a bit. Let's see, we've got 71 high. That was 66. So you might have picked up 4 or 5 pips on that trade. Maybe you only picked up 2 because it was coming back. Maybe it did that when the spread was too high and you didn't even get a chance to trade it. I'm not sure, because that, this time of day on a Sunday, the spread's pretty whacked, or Monday, depending on where you are in the world. So sometimes it is hard to trade those. But we're now below the previous mid by 31 pips. So you can just start, you could even start, trading at the 10 line. So at the 60, the 50, and the 40, you could just, if you wanted to, you could be adding on or stacking on the trade, and you just ride it until it comes back up. It's also looking at I think I might have mentioned it last week, looking at a grid system, which I still don't quite understand how he's doing his math, because when I do it, it seems like he's being a bigger hole than what he says he's in. So maybe I'm just looking at something wrong. Sometimes if something's not new, I gotta really dig into it and see if I can understand it, because he was putting trades on at each level, a buy and a sell. Then whichever level it moves to the next time, you exit the profit trade, but you're putting on another trade. So it just seemed to me, if you were going long, you'd have all these sells creating losses as price was moving up, even though you're putting in or banking some profit. But like I said, that's somebody else's system. I don't really understand it. Well, the Bengals let me down. So make sure you don't let yourself down when you trade, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.